busy day. First of all, let's talk about the movement on Wall Street today. That puts a smile on everyone's face, but is that a long-term smile?
Don't break out the hats and noisemakers and go crazy yet.
I was hoping.
It'd be nice if it was so easy, but there was some good news today coming out of Citigroup. There was a letter early this morning.
Yeah.
Vikram Pang, the CEO of Citigroup, put out a letter saying that, you know what, we're making money. Our cash flow is positive. We're doing okay now.
Yeah.
Obviously, we got to deal with some more write-offs down the road, but that kind of got things moving in the right direction today.
Okay, is that you could maybe look at that two different ways. First of all, it's good news. Maybe you could look at it to say that the bailout is working, or could it raise some red flags saying, well, how can they be profitable all of a sudden?
Well, little by little, I mean, I've seen all the write-downs that these banks have been taking. The bailout, and this is the problem. I have a real problem, and this is going back to this past fall where everybody decided to call it a bailout when in reality it was an investment into these companies. Citigroup has gotten more because they've been in more trouble than the other financial institutions out there. But it's not technically a bailout when they actually own the government. We, the taxpayers, own stock in these various different things. They needed to be recapitalized. And a lot of it has to do with the write-down that they have to take due to accounting rules.
Okay.
It's another thing that's happening this week. They're considering changing accounting rules, and this is in the wake of Enron. It's called mark-to-market, which forces banks every single day to mark all their assets on their books to what they could sell it at every day.
Yeah.
So basically, if you had to mark your house to market every day, it'd be what you could sell at the close that day. Or if you own a rookie Ricky Henderson baseball card, the book says it's worth X, but you know what? You can only sell it today for Y. All of these securities, these mortgage-backed securities, there's no market for them right now.
Yeah.
So you could have a great security where all the assets, all the mortgages are paying, but still that asset is worth zero, and that hurts these banks' balance sheets. Eventually that's going to change, and they're going to be write-ups.
Now those banks Citigroup has to pay back this money. They're obligated to pay back the money they received, correct?
Absolutely.
But in the meantime, you and I and everyone own Citigroup, right?
Well, yeah, we're collecting interest on that money, though, too. Citigroup is getting, they all have different deals out there, and that's part of the controversy and the populism of the day is like, oh, look at this one's holding some party at some hotel somewhere, and they took TARP money, they took bailout money. Well, that's not necessarily true. They were forced to take this past fall. They're also paying interest on that money back to the government. The government's strategy this past fall is they didn't want to say, oh, okay, they didn't want the public to perceive that if a bank was taking assets that they were going to fall apart, so they made everybody take it so they wouldn't know. It was kind of like a big, they didn't want to have it cause any runs on the banks. It was a pretty smart move.
Overall, except for today, which showed a great improvement in the Dow, the Dow has been going down. It's been taking hits. Is this a sign that Wall Street does not really agree with the bailout plan, the economic stimulus plan, everything else the administration is trying?
I would totally agree with that, and all the people that I speak with would agree with that as well. It seems like that there just is not, there's not any real order coming out of Washington, D.C. or the administration. Every day you get a different plan, a different this, different that. And also the reality is no one knows what their taxes are going to be down the road. And if you're going out and you're buying an asset and you're putting money at risk, and you expect to receive a certain type of return, and you don't know what your tax rate is going to be a year, 2 years down the road, that kind of affects how you're going to go about investing. Until we get some semblance of order in regards to taxes, everything going forward, we're going to still see a lot of this volatility.
I still hear experts saying that more banks are going to go under this year. Many went under last year. Should we be worried about that? Should the average guy who's got their money down the street, should we be worried about the bank going under?
As long as you're under the various different limits under the FDIC, you're fine. The FDIC it's not even taxpayer money. It's all banks have to pay into this insurance fund that is there to help whenever a bank goes under, so they can help pay out and get all the depositors. Keep it under the $250,000.
One other thing I wanted to ask you about, we had this discussion last week about alternatives to the big banks, the small community banks.
Absolutely.
Credit unions. I don't know if you can weigh in on that, but what's your thought about that?
Let me tell you something. Okay, right now, this is for everybody out there. This is what recessions are all about. They use recessions to make money and to take advantage of the situation. There is more money right now in the SBA program than ever before.
Really?
Ever before. And one of the places you can go do that are the community banks, are the credit unions, and they're going to work with you to get these loans. You want to start a coffee shop, you want to start a business, now's the time to do it because there's a lot of capital there.
Okay. Well, good advice there. We got more to talk about, but we're almost out of time. So let's keep that in mind, and then we'll check you out again next week. All right?
Got it.
All right.